Merry Christmas, of course, if you celebrate that. Uh, it's January 2nd, and it's 9:35 a.m., and we're going to take a look at the markets. It was quite busy over the Christmas period. The dollar got sold off quite strongly. So we're going to talk a bit about that. I'm going to talk a bit about other opportunities as well in the market. Now, if you're new to this market update, it's a daily thing we do here on investingcube.com under the Forex and trading webinar section here. Where we analyze the markets. It's free to subscribe to us on YouTube as well. You can follow me on Twitter at AlexFX00. So don't forget to follow me there to stay on top of the markets. Okay, let's kick off. All right, what's going on here then? So we had a quite nice little move here on the 27th of December. And the euro versus the dollar traded upwards. It's trading right now 112.07. And we're working with a sluggish uptrend. You can clearly see how it marks creating higher and higher lows on the daily chart, and 110.64 is the important level here now. And we moved up quite a bit, and you can see just on these candles here, the market is sort of seeing a bit of profit taking, and I do think we're probably going to trade upwards because the trend is upwards. The question is from which level. So I think that if we just take a simple look at the chart, I think around here will make a perfect opportunity for the price to bounce. And this is a little bit more than a 50% correction. The reason why I don't work with the first fib or something like that, because we are overall dealing with quite a sluggish uptrend, right? If the trend was much stronger, then yeah, would I be happy to buy at more shallower pullbacks, but this trend is not particularly strong. Here's another one, GBP versus the USD. As you know, the market following the election and ahead of the election rallied strongly, and then moved all the way up here on the UK election, and then it went all the way down pretty much. The trend now remains bullish here as well. So you can see that in the very short term, the price is creating higher and higher lows. So I do think the pound can continue to gain against the USD. So why is the dollar weakening? This depends on who you actually ask, but there is something here, which is the rapid expansion of the Federal Reserve balance sheet. So you might remember there were issues with the repo rate, and the Federal Reserve said they're going to lend money to these banks that have issues borrowing money on the overnight market, the repo market. So the repo market, by the way, is just a market for banks to lend money to each other. And usually the interest rates on those loans should be similar to the ones set by the Federal Reserve. But at one point, I think interest rates were up at about 10%, which is quite substantially used to borrow money. And the Federal Reserve stepped in to provide liquidity here. Now, the Federal Reserve said there was no QE, and if you look around, most people said, oh, well, maybe it's not a QE. Some people said it was a QE, and I think that gone a little bit under the radar. But at the end of the day, what they're doing is they're creating a bunch of dollars out of thin air. So obviously that boosts the dollar or boosts the stock markets and should weakening the dollar. And I think that's really what we're seeing here. And then the markets were really slow to react to it initially, but now at least you're starting to see some momentum. Maybe that is the case. It sure looks like it. There's definitely probably some other good explanations out there, like that the trade deal is gonna be signed and so on between the U.S. and China. I'm not sure that is the driver though. I think more the QE makes much more sense to me. So what should we do? All the charts pretty much telling us in general just sell dollars. So let's just work with that until proven otherwise. So here with the GBP/USD again, we're a bit of an uptrend, and I think if we move down a bit, then that makes sense. Now you can see this is also quite far away from where price is right now, and it might actually take a few days. And sometimes the market changes its behavior, and then you never really get the opportunities to buy on dips. But it's better than be safe and sorry. So let's give this a few more days, and then we'll see what happens. And it is still a bit quiet. I'm now back in the city of London after some time, and I'll tell you, on the streets of London this morning in central London is still quite quiet. There's not too much people out yet, so I don't think It's more people than just 2 weeks ago, just ahead of the holidays, but it sort of gives me an indication and feeling that a lot of people are still not back at their desks. So there's no real volume. So when the volume comes back, probably next week, when more people come back, then you might start to say the market's probably going to test the weakness in the dollar. Here's the dollar versus the Japanese yen, and it's quite straightforward. It's trading within support and resistance, and it's bullish overall. And already before the holidays, I said that people are probably going to buy here 108.93 between that level and 108.35. So there's no change to the outlook. It's bullish. Take out the low, and things are bearish. If you look at things like gold, we're bullish gold as well. We're trading pretty much down here, and I said the market can probably trade upwards to 150, so 1,500, and then it did. It went up, went even higher. Of course, if you were not already in position, then it would have been difficult to get involved because of the risk-reward ratio was not just good. Looking at this today, we're up to the highs. I think if we do go down to 1493.41, I think that makes sense. The market can go upwards. What else? Yeah, so people say gold and stock market prices can't go up at the same time. There's a negative correlation. I do agree there's definitely people who run to gold as a safe haven, but there's no particularly strong trend between gold and stock market indices right now where you see one go up and the other one go down. And what's happening, as I said, is QE, all the central banks cutting interest rates. That definitely lowers the demand for something like gold, which is a safe haven. At the same time, lower interest rates could potentially boost inflation and weakens the dollar in general. And I think that's what we've seen here. So it doesn't have to be that this correlation will continue to remain, negatively correlated. In fact, we've seen it before. They are sometimes positively correlated. So gold and stock market prices go up at the same time. So we need to bear that in mind. And for gold, for example, it wouldn't surprise me if we eventually reach these targets. So when the market was trading down here, I said a break to in June, I said a break to 1376 will take price up to 1,600. I also said that we have a massive inverse head and shoulders with a target of, well, let me see, I can't manage to press the right button, of 1697, and that as well is up here. So I think that as well is reachable. So it makes sense to, it wouldn't surprise me if this goes up and also stock market goes up. So what should we do again? That was a lot of talking there. Summarize. Bullish about 1461.5. If it goes down to 1493.41, I think people are going to buy. Does it mean that it has to go down? No. But that's sort of where the risk-reward ratio is good and will favor further gains. This as well is a bit of a break of a wedge or similar. And there are different ways of measuring a potential target, but difference between these two levels, and then you get the breakup point here, do suggest that we can go slightly higher here. This target of 1450 or 1550 or so. Crude oil prices. So crude oil prices, they're starting to get a little bit excessive, I think. If you look at this, we're within a big range and we're close to the highs here, just on following the attacks on crude oil production in Saudi Arabia. You remember the drone attacks? Iran was accused of orchestrating that. So things are getting a little bit expensive, I think. And there's two things we can do here, and as I mentioned last time, that unfortunately there's no right or wrong here, but you have this channel which is sort of driving the market, and we use this channel. We said to be bullish. We in fact told already bullish from down here, and we said I think this one we didn't work out on that perfectly for us, but this one worked out, and I think this one worked out as well. When we're looking to buy dips, and I've been looking to buy a dip for quite some time here, but then the market got stuck, and it's very short-term bullish momentum, probably just tracking stocks. And it will come there's going to come a day when there's going to be just a shock to the system, and this is probably just going to come down. And unfortunately, there's no right or wrong. But I'm going to give you these two levels, and then you can make up your minds. So the first level is 58.05. It goes down here to 59.43 and 58. So this is about 143 cents range. Here, the market might bounce and target the highs again. If it would cut straight through, which it could do at one point, it's probably going to go down to something like 56, 51. So down to these levels, but down here in this little spot around that trend line, I still think people are going to be buying again, unless of course there's something really, really negative. Let's talk a bit about stocks. So this is the S&P. S&P is on fire. It's looking really good. Of course, you know, would have been a great to get a new position here, a fresh position, but it's a bit difficult. If you're a short-term trader and scalper, you know that if we take out that high, which is 32.55, we can probably squeeze a bit higher to 32.80 or so. That wouldn't be unsurprising. But you also can look at this and you can see, oh wow, look at that. Market is up with 6% in a very short period of time. And if you look at it from October, the market is up with about 14%. Now I saw this as interesting stats. In the last decade, I think the S&P generated a return of about 188%. I think that's what people were saying. Let me see, what was the so that would generate an annual return of 11.15%. So in the last decade, the S&P generated an average return of 1.11, which is really very typical. If you look back in the last 120 years, the S&P has generated a return of about 9.5% or so, including inflation. You get rid of inflation, is obviously slightly lower, maybe probably some 6% or something like that. But and yesterday, last year as well, it was a 30% move. Of course, what happened last year is that the market started from very low levels, and the market had not added anything. It didn't add anything in January, in 2018, more or less. The market started here in 2018. In fact, it ended here. So last year, not last year, 2 years ago, the market ended down. What was it? See here. The market ended down by 9.31%. 31%. And then last year, because the market started from very low levels, effectively added some 32 accumulated from January. The market is up with 21. So just from that perspective, I do think the market, this is not a good time to buy. Just look at those averages. I do think it's going to be a good opportunity to buy on a dip. I think eventually we'll have a bit of a retest, like maybe the one I'm showing you here, or maybe a little bit deeper. And I do think it makes a lot of sense to be buying. If you look at this, you have a massive inverse head and shoulders here that got triggered, and that one has an very aggressive target of about 27% move like that. But these moves seldom happen in one go. And you might say, oh, what's that gonna be? Well, if the US manages to negotiate, and they have managed to negotiate some deals with other people, then that could potentially help US stock markets to trade upwards. Then you got all these rate cuts. You got Lagarde, which is the new ECB head. She might do stuff as well. So they're looking for things to buy over there, by the way, to continue their. They say they're gonna do QE until infinity, right? So I would definitely be bullish. In the very short term, though, looking at the averages and looking at everything, you need to be really careful. If you are scalping, you know what you're doing, then you know that we take out this high, we'll probably go a little bit upwards, and that's fine, that's cool. If not, I would wait for slightly stronger pullback. Here's the German DAX. The German DAX, we talked about buying at 13,200 before Christmas. The market went down, touched the buy zone, went all the way up, and then pulled back a little bit, back into the buy zone again. But we're now again in profit here. I think we can reduce the trend funding level now a tiny bit, now to something like 13,038. And this could be a good spot to book a bit of profit off. but I have a feeling this can continue slightly higher to 13,605. So there are opportunities to buy stock markets. You just need to see where they are to get that decent good risk reward ratio. And I think that's pretty much it. Let's just take a look at Bitcoin, and then we're going to answer a few questions. Okay, this is Bitcoin, and Bitcoin. I remember this. The market slid here in September 19th, and I said we're probably going to go all the way down to the triangle pattern objective, which we reached. Looking at this today, it's always interesting when it goes like that. We haven't necessarily built a base like that one, which can create a sell-off like that, but usually when it gets squeezed like this, it's sort of something like this. Some triangle wedge sort of thing, and then the market sort of shoots upwards. So that's what I would be focusing on in the short term, and I prefer horizontal support and resistance. You have this, which is 7,852. If we take that level out, we can probably trade slightly higher, and it could, I'm not saying, let's not get too excited about this wedge that I just deleted here, but it might be the beginning of maybe that move to the upside. So keep an eye on 7,852. Take that out, things probably reach 9,000. And until that happens, we'll probably trade sideways. Now, one point, of course, if people sort of get a bit fed up, they'll take out this low, and we'll trade slightly lower to maybe 4,960 if we take out that low. If you're very bearish, then you could probably sell at 7,410, which stops at 7,852. You just need to be careful here, because when this market spikes, it spikes in aggressively. Okay, that's the main presentation. Let's see here. We have Marvin and we have BNN here. So Marvin says, Happy New Year. Happy New Year to you, sir. Thanks so much. I hope you had a good time with your family. Time to relax this New Year's. I had a great Christmas, great December, really. I was mostly just relaxing. I was in Dubai for about 10 days or so, and then I spent another 10 days at home, so I didn't really work too much. A bit weird to be back at a desk, actually, but yeah, it was good, just relaxing. So BNN says, good morning. Just to confirm, is the pound gaining momentum against major currencies? It's been trending well for the past days. Please help. Is it good to trade this week, or should we wait until next week? I think it's fine to trade this week. That's what I think. We do have some momentum, so why not? I wouldn't mind trading. It's perfectly fine to trade. Yeah, about the GBP. I mean, the GBP is obviously in a bit of an uptrend. So yeah, I think if we do go down to something like 130.48, I think it makes sense to get involved. Let's take a look at Euro GBP. So this is Euro GBP, and this is your weekly chart. So here, from a technical perspective, we're still within that massive range, but it's still definitely something of a good market to keep an eye on. So, because we spiked all the way down here on the election in December, and this is what we call a rectangle to some extent. You got 1, 2, 3, 4 lows at the same spot. You got 1, 2, 3 highs at the same spot. The difference here is a solid 10%, 10.86. So this could easily be something that could move quite a lot this year, especially if the market starts to price in that they get some sort of a deal, a good deal, future trade deal between UK and EU. If that does not happen, we're probably going to go back into the middle. And the midpoint here is 87.99, so 88 pretty much. That will be your midpoint. Realistically, we'll revisit the midpoint We'll have Brexit on January 31st, and then starts the work of trying to negotiate a new deal. What's my preference? Just sell and break here. Alternatively, if you want to, you could potentially be buying some euros somewhere near this week's low. That will be 8,427. Stop will go just below. We go back up here. That's a 2 times receivable ratio. We go to the other side of the range more or less. That will be 3.51. If it turns really nasty, we'll go all the way up here. That will be a 4.6 times receivable ratio. What's the challenge with this one though? You're looking at a weekly chart, so you would effectively hold a position for probably 2-3 months. Sometimes it goes just really silly quick, right? But you will probably wait at least 4-5 weeks for the price to go upwards, if not longer. Shaquille Khan says, Happy New Year all. Happy New Year to you. Hope you're doing well. And I'm happy to see so many people here. We're going to be back here doing this live now, 9:30 a.m. Monday to Friday. I don't have any holidays planned in. I am, however, traveling to Hong Kong for business. I think it's on the 15th or 16th. So it's going to be 1, 2, 3, maybe 3, 4 days. I'm gone there. I'll be back in London on the 20th, but I land at 5 a.m. So probably not going to do the morning update on that Monday. Otherwise, I'm going to be around here. So definitely come and join me here at 9:30 a.m. London time. Happy New Year, says Antonio. Hope you're doing well. Hope you're doing good. Guys, we're going to wrap things up. This is the link to my Twitter. You're most welcome to connect there. I also have a WhatsApp group where I send out this morning updates. You can just click on that one and I'll add you to my list and I'll send you my daily webinar, this one here. So if you miss out or so, you get it there. Now, I'm not this sort of sending out messages like that. I'm not the best guy, so you won't necessarily get all 5 webinars a week, but you'll get a few every month, a few every week to remind you where you should be at 9:30 a.m. London time. GBP Aussie, any resistance? John Mitchell, Happy New Year to you as well. Thank you so much for joining us. About the GBP Aussie, let me see that. I've got a question by Shaquille about Aussie dollar. Okay, so let's cover both, and then we're gonna wrap things up. So GBP Aussie, okay. So this is GBP Aussie. The market obviously got very excited here. This is a weekly chart, switch on daily. The market got really excited here on the election. Looks like the mood there has tapered off a bit. If we ignore everything, you have some support here at the 185.57. As you can see, it's gone up a bit, and you could potentially turn bullish from here, target the highs. I personally think though that this excitement and bullishness we've seen, I personally think that, you know, that's probably over now, unless, I don't know exactly what's going to happen, but unless people get really excited, I don't know. I don't really see what people will be excited. There's no news happening here until sort of this time next year, if we have a deal or not, you know. So I think it might go up a bit. Maybe it'll go up to 91.25, and then we'll see what happens. If we would use this, which is a longer term system, using these Andrew's pitchfork, then it does suggest, you know, look to buy maybe at 180 or maybe 176 to then turn bullish. This is the Aussie dollar versus the USD, and the market here is bullish as well. This is a nice healthy uptrend. We traded all the way up to 70.32. The next major high is 70.82 up here. So that's the next target. You can see we had quite a nice momentum here, and take a flip from the low to the high gives you the 50% level at the 69.33, It's from here. I think people can be buying as well as the prior breakout point. So that's where we'll be looking at. Also, I'm not sure if you guys seen any analysis on it. It would be really interesting. But as you probably read, just visit the BBC news section. You can see it here, right? It's on the homepage. Like some terrible fires going on in Australia right now, and people literally fleeing for their lives. Look at that. This will definitely influence, or should influence, the economy over there. So I don't think that's being priced in the Aussie dollar right now. So that could come out. That should effectively influence things like inflation. Should also influence GDP growth, because people can't necessarily work as they used to, I guess. So it's gonna be interesting to keep an eye on that. That's flying a bit under the radar, even though everybody's fully aware of it. But I don't really see that being priced in the Aussie dollar. So if you see any research around, send me a message. I will love to read it, see if there's anything there to just understand if the market is pricing this in or not. Okay, guys, we're gonna wrap things up. If you have any questions for me, do let me know. Don't forget as well, we have InvestingCube's best trade ideas for 2020. So what we've done here is that I asked the guys that right here on InvestingCube to provide their best trade idea for the year. So there's 4 trade ideas, mine included there. It's free to read. Just need to click on read now, and then you can read it. You just need to become a member though. So sign in, and then you can read it. Have a great day, guys, and be careful out there. And I'll see you guys tomorrow, same time here at InvestingCube's YouTube channel and the ATFX YouTube channel here and investingcube.com. Thank you, and bye-bye. Cheers.